friends. In present video, I am going to explain about 11th problem from accounting for not-for-profit organizations topic. I am taking this question from Telangana State Telugu Academy Inter Second Year Accountancy Textbook. But this video is useful to all commerce students who want to know about this topic. Previous problems links are available in the description box. Let us see the question first. Prepare income and expenditure account and balance sheet from the following receipts and payments account of Suprita Nursing Home for the year ended 31st March 2019. So Suprita Nursing Home, this is one not-for-profit organization. Their main purpose is not to earn profits, to provide medical service to public. So their receipts and payments account for the year ended 31st March 2019 is given in the question. I have written that on the board also. Receipts and payments account for the year ended 31st March 2019. Debit side receipts, credit side payments. Below to that, he is giving some additional information. First point, nursing home had investments value of 8,000 rupees and the capital fund of the nursing home was 30,000 rupees. Second point, medicines opening balance as on 1st April 2018 is 2,000 rupees. Closing balance as on 31st March 2019 is 1,500 rupees. And what he is asking in the question? In starting he is giving prepare income and expenditure account and balance sheet. So in this chapter, first three problems are related with preparation of receipts and payments account. So from 4th problem to 10th problem, he has given receipts and payments account and we prepared income and expenditure account. So all these problems links are available in the description box. Now in 11th problem, income and expenditure account and balance sheet also he is asking. So new point is balance sheet also we are going to prepare in this problem. Receipts and payments account is given for the year ended 31st March 2019 now. So current year is 31st March 2019. If this is the last date of current year, starting date is 1st April 2018. So current year is 2018-19. Previous year 2017-18. Next year 2019-20. So for current year, this organization is preparing final accounts. So their final accounts contain receipts and payments account, income and expenditure account and balance sheet. So receipts and payments account is given in the question only. With the help of this and this additional information, we have to prepare income and expenditure account and balance sheet. So first, income and expenditure account. Heading is income and expenditure account of Suprita Nursing Home for the year ended 31st March 2019. So for receipts and payments account, income and expenditure account, we have to write for the year ended. When you are preparing balance sheet, you have to write as on 31st March 2019. That is the difference. So this is account now. So account contains two sides, debit side, credit side. Debit side, we have to write expenditure. Credit side, income. The basic difference between receipts and payments account and income and expenditure account in previous problems I explained. Anyhow, I'll give some small idea to you. See, receipt side, he gives capital incomes, revenue incomes both. So capital incomes means rare incomes. Revenue income means repeated income. Payment side, he gives capital expenses and revenue expenses both. So capital expenditure means rare expenditure. Revenue expenditure means repeated expenditure. So while preparing income and expenditure account, expenditure side, we should not take capital expenses. So only revenue expenses we have to show on debit side of this account. Similarly, credit side, we should not write capital incomes. Revenue incomes only we should show. Then where these capital expenses and capital incomes appear? In balance sheet. So capital incomes under liability side, capital expenses under asset side we have to show. So first with the receipt side we will start. Balance 20,000 rupees. So in receipts and payments account, debit side balance means this is opening cash balance. Now income and expenditure account we are preparing now. So we need not to take that amount here. So ignore. Next one, subscriptions 14,000 rupees. So subscriptions means if you are a member of this organization, to continue the membership regularly you have to pay some amount. It is known as subscription. So regular income now means revenue income. Credit side we have to show. By subscriptions. There is no adjustment regarding subscription. Therefore, amount 14,000 directly in outer column. Next, doctor fee. So this is nursing home now. Regularly they give treatment. So regularly they receive fees. So this is regular income. Means revenue income. Credit side we have to show. By doctor fee. No adjustment. Amount in outer column. Next, loan from bank. Do they take loan regularly? No. Rare income means capital income. Way to show capital incomes under liability side of balance sheet. So don't show in income and expenditure account. Next one, donation for building. So donations are of two types. First of all, donation means if anybody voluntarily gives some money to us, it is called donation. So donation is of two types. General donation, specific donation. General donation means without mentioning the purpose of giving the donation. If we receive the money, it is called general donation. So if amount is small, treat it as revenue income. If amount is big, treat it as capital income. Specific donation. For a specific purpose, if a firm collects donation, it is known as specific donation. He is giving that donation for building. So this donation money firm has to use only for building construction. So it comes under specific donation now. Specific donations are to be capitalized. Means we should treat that as capital income. So in balance sheet under liability side we have to show that. Not here. Ignore. Next one. Interest on investments. See the adjustment number 1. Nursing home had investments value of 8,000 rupees. So they invested some amount in outside securities. So regularly they get interest on that. Interest amount is 4,000 rupees. So regularly they get this. Means repeated income, revenue income, credit side of income and expenditure account. By interest on investments. No adjustments. So amount in outer column 4,000 rupees. Receipt side completed. Come to payment side. Salaries. So firm pays salaries to employees regularly. Means this is repeated expenditure. Revenue expenditure. So debit side we have to show. There is no adjustment now. So amount in outer column. To salaries. 8,000 rupees. Next. Medicines 4,500. And related to this, there is one adjustment. Second part. Medicine opening balance as on 1st April 18 is 2,000 rupees. Closing balance as on 31st March 19 is 1,500 rupees. So for any expenditure, if opening balance, closing balance and on payment side, if these three amounts are given, then the meaning is expenditure consumed we should calculate. So medicines opening balance 2,000 and the payment side he is giving 4,500. So payment side medicines means what? Firm purchased medicines and paid for that. So purchased medicines value 4,500. So 2,000 plus 4,500, 6,500. So at the end, on 31st March 19, with the firm, 6,500 worth of medicine should be there. But closing balance is how much? 1,500. Means what? 6,500 minus 1,500, 5,000 medicines are consumed during the year. Suppose instead of medicines, he has given one fixed asset name, say sports material. Sports material opening balance is given, closing balance is given, and on payment side, sports material purchased during the year is given. In this case, opening balance plus purchases minus closing balance becomes depreciation. So if it is a fixed asset, you should write depreciation word. But a medicine is not a fixed asset now. So here we have to mention consumed word. Medicines consumed during the year. This is an expenditure, revenue expenditure. So debit side we should show. Two medicines consumed. First, opening balance 2000 rupees in inner column. To this, add purchases. On payment side, medicines 4500 is given now. That amount. Total 6500 minus closing balance 1500 rupees. Then the difference amount in outer column 5000. So medicines consumed during the year, revenue expenditure is 5000 rupees. Next, rent and taxes. So regularly we pay revenue expenditure, debit side. No adjustment, 12,000 rupees. Next, cost of vehicle. Payment side is giving cost of vehicle. Means during the year we purchase this vehicle. So vehicle is fixed asset, no? Even surgical tools also same. So vehicle and surgical tools he is giving on payment side. Means these two assets, these are two fixed assets we have purchased in this current year. So fixed asset purchase is a capital expenditure. Means it is a rare expenditure. So regularly you are not going to buy vehicles and surgical tools. No? So capital expenditure in balance sheet under asset side we have to show. Not here, therefore ignore. Last, balance. So this is called closing cash balance. Closing cash balance also in balance sheet under asset side we have to show. Not in income and expenditure account. So ignore. Receipts and payments account items you have taken. Come to adjustments. Nursing home had investments value 8,000. So investment is an asset now. So in balance sheet, asset side we should show, not here. And a capital fund 30,000 also in balance sheet only. Medicines opening balance and closing balance already we have considered here. So everything we have taken in income and expenditure account. Finally, we have to find out the totals of two sides. Debit column total is 25,000 rupees. Credit column total 23,500. So difference is 1,500. Expenditure total is more than income total. So excess of expenditure over income is known as deficit. So deficit, which side we should write? Credit total is less. So credit side, this 1,500 deficit we have to show. Suppose income is more than expenditure, then surplus comes. That amount debit side we have to show. By deficit 1,500 rupees. Two sides, highest total 25,000. Credit side also same. Income and expenditure account is completed. Next we have to prepare balance sheet. Heading is balance sheet of Suprita Nursing Home as on 31st March 2019. Liabilities amount, assets amount. Balance sheet is not an account, it is only a statement. Therefore, don't write DRCR symbols. So rules are, liability side we have to show capital incomes, rare incomes. Asset side, capital expenses, rare expenses. So see receipts and payments account, receipt side. Opening balance of cash, it comes in opening balance sheet asset side. Now this is called closing balance sheet. Because balance sheet as on 31st March 2019. So 31st March 2019 is closing date of the year now. On that day we are preparing balance sheet. So in this balance sheet as cash balance, asset side, this amount you have to show. So this is balance carried down now, means closing cash balance. This is balance brought down, opening cash balance. So if you prepare opening balance sheet, in that balance sheet asset side you have to show this amount. In present problem we need not to prepare opening balance sheet because capital fund is directly given in the question. If capital fund is not available, then to calculate that we have to prepare even opening balance sheet also. In coming problems you are going to learn about that. Next, Subscriptions, revenue income in income and expenditure account completed. Doctor fee, same. Loan from bank. So from bank, firm has taken loan. It is rare income now. Capital income, 10,000. So liability side we have to show that. Loan from bank. This is not account. Therefore, here left side don't start with the TO2. Right side don't start with the BY. Loan from bank amount is 10,000 rupees. Next, donation for building. Specific donations are capital incomes. Liability side you have to show them. Amount 21,000 rupees. Next, interest on investment. Revenue income in income and expenditure account completed. So receipt side completed. Come to payment side. Salaries, revenue expenditure not here. Medicines in income and expenditure account completed. Rent and taxes completed. Cost of vehicle, surgical tools. These two are assets no. Capital expenses no. Asset side. Vehicle 20,000 rupees. Surgical tools 20,000 rupees. Next, balance carried out. This is closing cash balance. So asset side we have to show. Cash. Don't write balance. 10,000 rupees. So receipts and payments account amounts we have taken. Even adjustments also we should consider. First one, nursing home had investments value of 8,000. Investment is an asset. So asset side 8,000 rupees. Continuation, and the capital fund of the nursing home was 30,000. Capital fund at the end we will show. Second point, medicine opening balance on 1st April 18, 2,000 rupees. If you prepare opening balance sheet under asset side, you have to show this amount. Closing balance as on 31st March 19 is 1,500. So on 31st March 19 only we are preparing balance sheet to. Here medicines closing balance you have to show. Asset side medicines 1,500 rupees. Finally come to capital fund. Capital fund means what? One should recollect trading concerns, means sole proprietorship, partnership, etc. There we used to write capital word under liability side. No? So in case of not-for-profit organizations, we should not use capital word. So instead of that, capital fund word we should use. Capital fund is also known as general fund or accumulated fund. So in case of non-trading concerns, if they get any surplus, then with that surplus amount, they create capital fund. And some capitalized amounts, for example, legacies are to be capitalized, entrance fees is to be capitalized, donations are to be capitalized. So with these capitalized amounts also, they can create capital fund. So capital fund means what? The difference between assets and liabilities. So excess of asset over liability is known as capital fund. So to this capital fund, surplus will be added, deficit will be subtracted. Capital fund from 1 year to next year we have to carry forward. That is why capital fund is also known as accumulated fund. So capital fund under liability side we have to show. Amount is 30,000 rupees. In present problem we got deficit now. Therefore, you have to subtract from capital fund minus deficit 1,500. Then the remaining amount in outer column 28,500. So everything we have taken in balance sheet. Finally, two sides totals we should calculate. Liability side total is 59,500. Asset side same amount. Thus, in balance sheet, asset side and liability side you should get same total. Then only problem is correct. So this is all about 11th problem from not for profit organizations topic. Hope this video is helpful to you. Thank you.